Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, Managing Director, and in this educational lesson, we're going to answer objectively, looking at the charts, is it time to buy oil now after a 35% decline over the last 10 weeks? And this is actually a follow-up of a video I did 2 weeks ago, and this was the slide I showed at that time. There were a number of hedge funds blowing up. Optionsellers.com was one of them. They got caught up in the volatility of the oil and gas markets. And then this was another one. The Wall Street Journal reported Brenham Capital blew up their fund in the oil markets. And I did this lesson showing the breakout failure up here. Oil was bullish, but then there were multiple times to tell you to exit your bullish positions and actually turn around and get bearish. Anybody who blew up their accounts by being a deer in a headlight sitting through this should not be trading. They don't have proper objectivity. They don't have proper position and risk management, and it's sad. But we asked the question, and I remember closing this analysis by saying there's absolutely no reason to take a bullish position in oil right now based on technical analysis. Using the Master Trader method, we're wanting something to suggest a trend change, not just a stabilization or slowing momentum in a downtrend. And I said, this was on 2 weeks ago on a weekend, and I said, hypothetically, folks, what if we were to gap over these highs on Monday? Guess what? That's exactly what we did, but I'll come back to that. The weekly charts here, you can see that they were bullish. We actually had a bullish position on this breakout, and we managed it to a profit. And now we have a climactic buy setup. These charts are 2 weeks old when I did them before, but this was showing you that yes, we're interested in buying oil at the right time, confirmed with the charts. But we were also highlighting the fact of, look at this weakness in oil to the broader markets. The spiders have since given it up, and they're weak now also. But we were teaching and showing that for us to buy a bottoming pattern, we're looking for what we call a potent reversal. These were 3 examples we discussed. You can go back and look up that old video. And also, we had a prior episode of our Master Trader Live, which we do every Wednesday at noon Eastern, and it was on these bottoming patterns. So go to mastertrader.com under Resources tab and look this one up. It was very valuable information in there, as is all of them. Fast forward now 2 weeks later, and I'm asking the same question. Is it time to buy oil? This gap up that I just mentioned the following Monday, we sold a bull put credit spread. We specifically said this is not a directional trade. A directional trade means we are bullish on multiple time frames and we're looking for a big target. This was not one. It wasn't mature yet. It hadn't set up. We said we needed more, so to speak. We need an event. We need something more before we commit to the long side. But with that gap up and intraday strength, we said we have enough information for an income trade, and we specialize in selling out of the money calls and puts around compelling patterns where the premium that we collect is our profit to keep merely for predicting a short-term top or bottom. We are still in this trade actually. We sold the $10.50 put, bought the $9 put. That's what's called a bull put credit spread, and we make money through time decay because people who buy options are buying a time wasting asset like a melting ice cube. And so even though this stock is like 30 cents, this ETF, 30 cents lower than when we entered it, we're still at 50% of max profit, and that is because of time decay. So this is going to be a winner for us. We're just, it expires this coming Friday, And we've moved our stop now to under that green bar, and we're just going to manage it accordingly. But back to the question. Momentum has definitely slowed. This was a nasty declining 20 period moving average. You can see the comfortable space between the candlesticks. It got extended here, and now the fact that it's holding these lows, building up a base of support, that means demand by definition is building. You see the 20 period moving average starting to flatten out. We still need an event, but we are in a much better situation today than we were 2 weeks ago, because now we have 2 weeks of additional candlesticks creating support if we can break out. So we have this on our radar, definitely over the high of this red bar. We will take a directional trade because of the climactic weekly chart I showed you, but more aggressively, we're going to start nibbling over the high of this green bar, because then we have this little red bar being ignored. So you can buy over the high of this one, stop under the lows, manage in between per your trading plan. And it being holiday season here, my partner Greg Capper and I put together some unbelievable specials for you to help you learn how to trade and invest using stocks and options using the Master Trader method. We've been doing this for over 25 years, and we get so many comments from people that they say they wish they found us earlier. We genuinely want you to succeed, which is why we put together these packages for you. We want you to become part of the Master Trader family. Don't forget to subscribe to our YouTube channel if you want to continue to receive valuable information on trading and investing in the markets. Have a fantastic and safe holiday, good trading, and see you next time.